Welcome to Share Talk, the only podcast where investors come first.
We have back with us again David Horgan, Chairman and Managing Director of Clontarf Energy. Hi David, how are you?
Very good, thanks.
Good to hear it. You announced that the Satin of One Well did not show commercial hydrocarbons. How has this affected plans to explore deeper targets in the block?
It actually hasn't affected plans on the deeper targets or indeed on other blocks at all, because what happened was the Sasanov target was very specific and it was very large and it was calculated to be relatively low risk. Now, low risk for a wildcat means odds against, 3-1 against. But, relatively shallow, relatively easy to drill, albeit in 1,000 meters of water. And have to say, the seismic amplitude was excellent, very bright colors, so much so that when I went to Australia, I wanted to see the original data, and I did see it, and there it was on the original data. So, we drilled it in good faith. The independent valuers endorsed the estimated potential of 17 cubic feet. So it was a good well. It was drilled without accident. It was drilled within adjusted budget. But unfortunately, while we had extensive oil and gas shows, it didn't have commercial hydrocarbons. So that happens. I mean, what seems to be the case is that the lateral seal seems to have breached. No, one of the worries I had before drilling the well was that it was quite a distance from the charge, which is deeper, closer to the deeper targets. But elsewhere in Australia, there had been a very extensive charge all around us. And sure enough, there were shows. So the presence of gas and liquids was not a problem. And the top seal, which is our normal worry in these things, also was a near perfect seal. You had no shows until you broke through the very hard rock at the top. And then the logs went off the table. And for a few glorious hours, we thought we had a significant discovery, at least in the first target, the secondary target, once you go through the top seal. However, looking at more detail in the logs later that night, it became apparent that there were some incongruities. For example, the density logs were not consistent with a gas target. So on review, and taking samples, it appeared that the main target reservoirs in the shallow sections were water wet. However, if you look at the deeper targets closer to the original gas charge, it's a totally different trapping mechanism. And the rocks were laid down hundreds of millions of years earlier. So really what happened in the shallow section has of no significance for the integrity of a seal in the deeper section.
Okay, so the obvious question then is, what's the timeline for the next phase of drilling?
Well, first of all, we want to get all the value we can out of the data. And remember, Clontarf is only 10% working interest going forward in this very large block. So, we'll have to first do the analysis and then agree with our partners. I suspect that we will have a well elsewhere before we have the deeper well on Sasanov, just because it's relatively deep water and it would be much deeper rock and therefore more expensive. And we're looking very actively now at plays, both similar plays in the Australian offshore, with in some ways quite similar probabilities and size to Sasanov, and also some possibilities in the onshore, because the Northern Australian onshore has been neglected because it was really explored quite late and explored at a time when prices, particularly for gas, were much lower than they are today. Now, if you look at the gas price, it's $37 in Europe. Just 19 months ago, it was $2. In Asia, it's not far off, about $30 in Asia, even though we're in the middle of the summer. So I think we're in a completely new world, not just for gas, but for commodities generally. And I think there's lots of exciting possibilities that might not have been so exciting even 2 years ago, and now should really interest investors.
Okay, talking of possibilities, are you still considering farming into Western Gas's recently acquired projects from Hess?
Yeah, I mean, what they did was, showing a lot of vision, they took over some really good acreage that Hess had spent about $1.5 billion working up. And I think you should stress that Hess did not withdraw from those properties because they didn't like Australia, or they didn't like gas, or they didn't like the properties, having spent all the money. Hess withdrew because of the crash after 2014. In fact, they didn't even wait to get the results of the seismic in this block before they withdrew. And people who know the industry will know that they also withdrew from parts of South America, a lot of their fracking acreage in North America, an LNG project in Ireland and elsewhere. And they were concentrating their scarce resources really on the gigantic discovery of Guyana with Exxon. Exxon was doing a lot of cash calls, and Hess didn't want to be diluted on that. So if I didn't understand why Hess had withdrawn, I would be a bit more skeptical. But knowing the company and how good it is and what other pressures it was under, what happened to the oil price at the time, I think it's an opportunity, and full marks to the Western Gas for buying it cheaply and having the guts to move forward with those extensive properties. And I'd be very interested in participating in more wells, both on the offshore and on the onshore. But I would expect to have more favourable farming terms in the future, maybe 3 for 2 rather than 2 for 1. We didn't have a lot of choice on the 2 for 1, really, because we came in quite late. The work was quite emphatically endorsing what ERC had done and what Western Gas and Hess themselves had done. Also, there had already been 2 deals with Aussie juniors, very good Aussie juniors, PRM and GTL, and they had come in on a 2 for 1 basis. So we didn't really have a choice to haggle over the terms. But I think next time we'll be starting off earlier with much more time to negotiate it. I think we'll do a better deal on the terms. And I think our partners will value our participation in any consortium.
And a question, obviously, shareholders will be having in their minds is that you raised $3.5 million in April. Will Clontarf need to raise more funds to progress its projects?
Well, if we're drilling wells through farm-in or working interest, we'll have to fund it because that's the nature of the game. It's an R&D type industry, so you have to invest risk capital. But remember, when we raised the money in April, we didn't raise a penny in London. 100% of that money was raised in Australia, and it was raised at a 25% premium to the bid price when we started raising that money. Now, we couldn't have done that in London because if you talk to brokers in London, the commodity boom is in every newspaper and on every TV news program, but it hasn't yet fed through to exploration in the way that it has in Western Australia. And you talk to people and they're looking to buy at a discount. Some people have even floated the idea of warrants, though we don't do warrants. So my strong preference would be to take the money which is least dilutive and take the money at a premium. I think we will look at possibilities of locking people in or locking a portion of their shares in the future. What happened on the Aussie placing is that quite a lot of the Aussie punters took their profits quite quickly, and I've never seen that before. I mean, normally you announce a funding, the share price goes up, maybe it doubles, you announce a mobilization, it doubles again. And in the course of drilling a high potential well in a safe place, unless something goes wrong, really you'd expect the price to go up 3-4 times. Now, if it hits, it could go up a big multiple. If it misses, you could lose 75% of your value or even more, at least temporarily. That didn't really happen this time, mainly because I think some of the Aussie investors were new to the AIM market. They already were exposed through other vehicles, but now we know them much better. We'll get in earlier. We'll put a bit more effort into it. We'll look at possibilities maybe of locking people in. Also, the wells that we're talking about in the future, I think it would take maybe a year before we're actually spudding, even for an onshore well, because you've got to go through all the planning process and the permitting and talk to local communities if there are local communities. So I think we'll have more time to spread the good news, and it'll be better for our London-based punters on the way up.
Okay, good lesson learned then. Do you think you can give us an update on your assets in Ghana and Bolivia?
Yeah, I mean, we're back in contact with the Ghanaian authorities. What happened to Ghana was that when we first started Ghana, it had very little commercial hydrocarbons, about 600 barrels a day, but it did have potential. And then, of course, there were the discoveries by Cosmos Gas and Talo and ENI, etc. And we took on acreage, the next acreage that was available on pretty good fiscal terms. We were moving forward on that. But under a previous government, we came up against some governance issues that, we were invited to make contributions which would have breached our ABC policy, anti-bribery and corruption policy. And that delayed the ratification. as did elections. Then, of course, in 2014, your listeners will know that there was a oil price crash and a price war involving OPEC, the frackers, and the Russians. And basically, we went into a depression in the exploration market really until recently. There was some recovery in the oil price 2016, then again 2018. There were a couple of price wars, but really the farm-out market didn't recover. And if a company like Clontarf goes into a reasonably deep water, over 1,000 meters type targets in Ghana, we would want to spread our risk. It'd be fairly standard in the industry, particularly for a junior. And where possible, we'd like to farm out rather than in. In other words, we'd like to be carried by a much larger company. And if we can ratify in a reasonable market, I'd be very confident that we could farm out on reasonably good terms. I can't say exactly, it depends on the market. Depends on the extent to which it's an auction process. So it really wasn't in our interest over the last few years to push very aggressively to ratify, because if we had done so, the clock would start ticking after 3 months, and we've expected to acquire some seismic and even start planning and drilling a well. We'd rather do that with somebody else's balance sheet rather than our own. So it's only really in recent months that we've been able to regalvanize the effort. So given that the Ghanaians themselves have been through a chastening experience with a fall in the commodities and COVID and all the rest, I think there's a new realism in many of these African countries. I mean, generally, Africa's time has come. If you look at the exploration record in much of Africa, it's almost untouched. I mean, people think that there's a lot of drilling in places like Nile Delta, Niger Delta, and Libya. And in some basins there has been, but typically not very deep wells and typically relatively few compared to the North Sea or Gulf of Mexico. So we see Africa, both offshore and interior basins, as really untouched, and look forward to being much more active there in the years to come.
So I guess my final question then is, what could investors expect in the coming months from the company?
Well, I'm off to Bolivia today. I mean, we haven't neglected our lithium interest in Bolivia. We've been a very long-standing player there. We had very good negotiations with the government. We're quite happy to work within the legal and social constraints, which would be likely a joint venture with the authorities. They did have an issue with the 2017 lithium law, which on one interpretation could restrict processing and exporting of lithium to state-controlled companies. Now, I understand that they're updating and reforming the law, and we fully support that and recognize, of course, their sovereignty. And I'm optimistic that we'll be able to negotiate in the near term a technical cooperation agreement whereby we enter into a formal agreement to map and sample and maybe do extensive test work, which is critical for lithium for high-value battery applications. And while that TCA or technical cooperation agreement doesn't give you a formal interest in a joint venture or the right to develop and process, you do have a effective right of first refusal. I mean, we've done this in other companies in Iraq and the offshore Ireland, and it's generally worked pretty well. It's not 100% legally solid, but it's a pragmatic way forward. I mean, the Bolivians have been working hard on direct lithium extraction with a number of technology vendors. And we didn't participate in that process because we don't have proprietary technology of our own. What we'll do is we'll use whatever technology is most effective for the salt lakes that we're hoping to develop. But I think now the door is finally opening on Bolivia. The current government got a rousing endorsement earlier in the year from the electorate. While it's sort of different to, say, conservative governments in Europe, it is very keen to develop its natural resources. And while it has maybe 40% of the world's economic lithium, the reality is they haven't exported a single kilo of battery-grade lithium so far. And I think people realize that, and they want to develop the country, and they don't want to be left with stranded assets. So I think the future in Bolivia is quite bright now.
Good to hear that, David. It's been a pleasure as usual, and we look forward to your next update.
Many thanks.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.